So today I'm gonna discuss the aviation industry and with a focus on Air Canada. Is it value investing or we're buying the dip? So let's take a look at the industry together first. Before the pandemic, the North American aviation industry was actually doing super good, had a net income of 16.5 billion US dollars. And one thing to note that the net profit per passenger reached $16. That's the highest globally, 3 times higher than Europe and 5 times higher than Asia. After the pandemic hit, everything starts to get ugly. And what has the pandemic done to the aviation industry in specific? One thing to note that is the decrease in connectivity. In recent years, the industry were actually trying to lower the real transport cost year by year, and in turn, the connectivity will be increased, increasing more routes and generating more revenues. Because of the COVID-19 hit and the air travel restrictions, the positive loop is actually broken down. And that actually damaged Air Canada's revenue in a more serious way. We can see that Air Canada's price dropped as much as 75% from previous high. Why do I say Air Canada was damaged most seriously? That's because Air Canada actually has a really diverse revenue background geographically. We can see that in 2019, it has more than about 70% of their revenues coming from non-domestic routes. And you may think 30% of revenue from Canada seems to be a small portion of revenue, but remember that Air Canada's market share in Canada actually reached a 54% in 2019. That's really high. That's basically dominating the domestic markets. And should we worry about their liquidity levels, knowing that airline industries are burning billions of dollars? Actually, Air Canada entered 2020 facing the COVID-19 with one of the best liquidity positions. And taking a look at the numbers, with the current liquidity of Air Canada, they can survive for 5 more quarters. And that's assuming that they're not raising more liquidity or decreasing their cash burn rate to another extent, and which is not true. They can definitely do more than that. So I say that we do not have to worry about their liquidity only if the COVID-19 is going to continue for 2 years or more. And taking a look at their US peers, you may think that's a lot of liquidity for these US airlines. That's because by Q2, the US government has already put in 25 billion US dollars in support to the aviation industry for the United States. In turn, there's nothing done in Canada yet, and I think it's coming up. The aviation union and including Air Canada is asking for a 7 billion Canadian dollar loan to carriers at a 1% rate. It's probably gonna come in recent days. And I think Air Canada actually has a better profitability after the pandemic. One thing to know that the oil price actually plunged in 2020. According to my research, it's gonna continue for that way for a few years. And actually that grants the airline industry for 15% higher operating revenue opportunity. And one thing to note is that I grabbed this chart from IATA. That's a forecasted demand globally in the future years. We can see that China is gonna become the biggest air travel demand country. The biggest market is gonna be China. The huge increase from India and from Indonesia. One thing in common is that they're all from Asia Pacific region. Remember, we talked about Air Canada's diverse background. It actually has the highest exposure to Asia Pacific region and grants you more flexibility in generating more revenues and catch that air travel demand. And thank you. That's my short outlook on Air Canada and the aviation industry.